Spain presents a puzzling economic paradox. It is one of the fastest growing economies in the Eurozone, yet it consistently grapples with the highest unemployment rate in Europe. This perplexing situation is not new. It has been a persistent challenge for Spain, raising questions about the underlying structural issues within its economy. Spain's vibrant tourism industry and robust export sector have contributed to its economic growth. However, these positive indicators mask a deeper problem, a labour market unable to provide quality jobs for its workforce. In April 2024, 13.1 million EU citizens were unemployed, reflecting an unemployment rate of 6.0%. Spain had the highest unemployment rate at 11.7%, nearly double the EU average. In this video, we will explore the complex factors contributing to Spain's high unemployment rate, examining its historical context, labour market structure, educational system, and government policies. Understanding Spain's economic anomaly requires a closer look at its recent past, particularly the aftermath of the 2008 financial crisis. This period had a profound impact on the Spanish economy and exposed vulnerabilities in its labour market, leading to a surge in unemployment that the country is still struggling to overcome. The 2008 financial crisis hit Spain particularly hard. The bursting of the Spanish housing bubble, fueled by easy credit and speculative investments, had a devastating impact on the construction sector, a significant employer in the Spanish economy. This led to a sharp increase in unemployment. As unemployment rose, so did the national deficit. The Spanish government was forced to implement austerity measures, further impacting economic growth. These measures, while necessary to stabilize the economy, contributed to a vicious cycle of job losses and economic stagnation. The crisis exposed deep structural weaknesses in the Spanish economy, particularly the labour market's heavy reliance on temporary contracts. This dual system, with its stark contrast between permanent and temporary workers, left a significant portion of the workforce vulnerable to economic shocks. A defining feature of the Spanish labour market is its two-tier system: permanent contracts offering job security and temporary contracts characterized by precarious employment conditions. This duality lies at the heart of Spain's unemployment crisis. While permanent workers enjoy strong legal protections, temporary workers face high job insecurity, low wages, and limited social benefits. This system creates a segmented labour market with a stark divide between privileged insiders and vulnerable outsiders. According to Eurostat data, Spain has the highest proportion of temporary workers among OECD countries. In 2023, over 25% of employed Spaniards were on temporary contracts, significantly higher than the European average of 14%. This over-reliance on temporary contracts hinders productivity growth and exacerbates unemployment. A key reason for Spain consistently seeing higher unemployment than the rest of Europe is due to the country continuing to face low productivity, even though most employees work longer hours than the rest of Europe. According to Arturo Lajera, a professor at the Complutense University of Madrid, these companies have less productivity, so their benefits are always more limited and their investment rates are lower. And lower investment rates mean less employment. Businesses incentivized to hire temporary workers are less likely to invest in employee training and development. This short-term approach creates a workforce ill-equipped to adapt to changing economic demands, further contributing to Spain's unemployment challenge. Spain faces a growing disconnect between its education system and the needs of the labor market. While Spain boasts a high proportion of university graduates, many struggle to find jobs that match their qualifications. This mismatch between education and employment opportunities has led to high levels of youth unemployment, a persistent problem plaguing the Spanish economy. The Spanish education system, often criticized for its emphasis on theoretical knowledge over practical skills, has not kept pace with the evolving demands of the job market. This disconnect is particularly evident in sectors like technology and engineering, where demand for skilled workers outstrips supply. According to the OECD, Spain has one of the highest rates of overeducated workers, meaning individuals are employed in jobs that do not require their level of education. This mismatch not only leads to underemployment and wasted potential, but also discourages employers from investing in training and upskilling their workforce. Regional disparities in Spain's economy. Spain's economic landscape is characterized by significant regional disparities, with some regions experiencing higher unemployment rates than others. Southern regions, such as Andalusia and Extremadura, have been hit particularly hard by unemployment, with rates significantly exceeding the national average. These regions often struggle with a lack of economic diversification, relying heavily on sectors like agriculture and tourism, which are susceptible to seasonal fluctuations. Limited industrial development and investment in these regions further exacerbate the unemployment challenge. The concentration of economic activity in a few major cities, such as Madrid and Barcelona, contributes to this regional imbalance. This concentration draws skilled workers and investment away from less developed regions, perpetuating the cycle of economic disparity and high unemployment. Spain's hidden workforce. Spain has a substantial informal economy, a hidden workforce operating outside the formal regulatory framework. This shadow economy, while providing employment opportunities for some, poses significant challenges to accurately measuring unemployment and implementing effective labor market policies. The informal economy encompasses a wide range of activities, from street vending to undeclared construction work. While some individuals engage in the informal economy out of necessity, others do so to avoid taxes and social security contributions. This undermines the tax base and puts a strain on public finances. The presence of a large informal economy distorts official unemployment statistics, making it difficult to assess the true extent of joblessness in Spain. Moreover, the lack of social protections and job security in the informal economy perpetuates a cycle of precarious employment and low wages. Reform or stagnation. Spain's battle against unemployment. Addressing Spain's persistent unemployment problem requires a multifaceted approach, tackling both its cyclical and structural roots. The Spanish government has implemented various labor market reforms and policies aimed at reducing unemployment and promoting job creation. One key reform aimed at tackling the duality of the labor market was the introduction of a new type of contract in 2012, intended to bridge the gap between permanent and temporary contracts. However, the effectiveness of this reform in reducing precarious employment and boosting job creation remains a subject of debate. Other government initiatives have focused on promoting entrepreneurship, investing in active labor market policies such as training programs and encouraging apprenticeships. While these efforts have shown some promise, their impact on reducing unemployment has been limited, highlighting the deep-rooted nature of Spain's labor market challenges. A European perspective. Spain's labor market in context. Spain's unemployment rate, while the highest in Europe, reflects broader trends and challenges facing the European Union. The Eurozone crisis, aging populations, and technological advancements have all contributed to rising unemployment levels across Europe. However, Spain's labor market structure, with its heavy reliance on temporary contracts and its rigid employment protection legislation for permanent workers, makes it particularly vulnerable to economic shocks. This dual system disincentivizes employers from creating permanent jobs and leaves a significant portion of the workforce vulnerable to unemployment. Comparing Spain's labor market policies with other EU countries reveals a mixed picture. While Spain has made efforts to reform its labor market, some argue that more needs to be done to address the duality of the system and reduce the gap between permanent and temporary workers. Spain's economic crossroads. Spain stands at an economic crossroads. While it has made strides in recovering from the 2008 financial crisis, the challenge of high unemployment persists. Addressing this requires structural reforms, educational reform, and investment. Investing in education and training programs is paramount. Spain can unlock its economic potential and create a brighter future for all its citizens. Why do you think Spain has the highest unemployment rates in Europe? And more importantly, why is Spain struggling with increasing unemployment? Let us know your thoughts and experiences below in the comments. Until next time, take care.